Hey traders, Raghee here. That's an awful lot of Raghee. There we go. Hope everyone's doing well. Happy Friday, happy non-farm payroll Friday, everybody. We're taking a look at the post-NFP environment where we have, well, obviously a lot of volatility. What's the takeaway there? You can take a look at the notes that I've got on the left-hand side of this screen, and you'll see that the non-farm payrolls were better than expected. So whatever we thought, the consensus was lower than the actual. The actual came in with more jobs and a lower unemployment rate. So that's quote unquote good. The big question is, at what point, as we're wandering in to a more dovish environment come 2024, does good news actually result in bullish price action in the indices? And we're looking at likely the very, very, very beginning of that kind of adjustment, which is to say, if data is strong and the Fed's going to cut, I mean, we're not going to see a hike from the Fed. So that once the hikes are taken off the table, the question now is, for how long will they wait before they cut? And the other question is good, strong economic data, higher GDP, lower unemployment, higher jobs prints, are those finally going to map to equities rallying? And this might be, and I mentioned this in Top Tier Outlook today, or this weekend, that today's hot zone is going to ultimately reveal if solid jobs numbers are actually bullish. And we might be seeing that. And so this is going to be a shift in what we've been seeing thus far. All right. Ultimately, gang, though, I do want to mention non-farm 830 hot zone. It is very much a futures, and or for those of you that like to trade Forex, this is definitely something that has to be traded via futures or Forex, because equities are not, well, they're not playing yet. So let's ask ourselves this, and I call this the echo. So when we have an 830 hot zone, 830 Eastern, and then 1 hour later, the Wall Street bell ultimately rings, what we have then is a different group of participants who now have an opportunity to react to what happened earlier in the morning. So here's a look at the hourly price movement ranges that we had with the ES and SPY. SPY is going to have its shot at 9:30. ES got to move at 8:30, right? I'm always talking East Coast time, gang. You'll see the clock in the upper left-hand corner. Gang, the equity markets, the stock market is an East Coast phenomenon, right? So we'll talk in East Coast time. All right, now you'll see that price sunk into the green, the volatility-based support, rallied up into the red, the volatility-based resistance. So we're in a range. And by the way, this is not a crazy range. Now I say crazy, we're not outside the typical probability of volatility. Volatility, when looking at historical volatility, I don't mean 7 periods, 14 periods. I'm talking 6 months of action measured from 8 to 9 o'clock. I mean, that's the specificity with which I look at historical volatility. That's the algorithm, if you will. Fancy, so fancy. All right. So if we take a look at SPY, it's going to have its shot at 9:30. And you might say, okay, Rog, what's the plan? Are we bullish? Are we bearish? What's the plan? So what we're going to do then is kick it off with where are the indices in relation to the previous session close. That'll be the first thing when I hop into the chat room of my folks in the Sector Secrets Mastery, which, by the way, you can check out over at sectorsecrets.com. We day trade in there. We swing trade in there. We also scalp. The bot's got our bot scalping. We're in the process of setting up earnings plays right now with the 642 window that I've been teaching for many, many years now. And then, of course, we have our portfolio. We reviewed our portfolio October. So October to October, we reviewed our 1-year portfolio. While we have shaken loose a couple underperformers, it is generally speaking up very nicely. And so if you're looking for multiple styles in an environment where we're focused on not necessarily being glued to the screens all day, but finding the windows of opportunity where you can come in, do some swing trading, get back to life, come in, do some day trading, get back to life. I think you're going to love what we're doing in there. That's and it's a reflection of what I do, right? It's a reflection of what I do with my life. Every one of us has things that we need to do or want to do, right? And the whole point is to find a way in which to work hard, but then play hard too. That's the way I like to do it. All right. So taking a look at the NAS here, are we above or below the previous session close? Notice I'm looking at the futures, right? This is the nearly 24-hour look at what's going on in the NASDAQ. So we're above the previous session close. And I'm just going to move this little line here, just like that. And we've got a neutral environment. So it looks like for now, we've shaken off the movement lower. But remember, if we're going to see an echo at 9:30, we could see one more push lower. If we see a push lower and the structure of the NASDAQ can remain neutral, yellow, you'll notice the color at the very bottom of my screen, we will look for an hourly price movement range buy as long as we can remain above the previous session close. So there are some buys brewing this morning. And for those of you that have been with me this week in the mastery, you know that we're bullish. We've got some bullish swing trades going on right now. We've been looking to the long side overall into December, window dressing, Santa rally. That's going to be the path of least resistance, quite literally the path of least resistance. All right. Alex asks, can I review my day trading approach to NFP? Really, really simple, Alex. I use the hourly price movement ranges. That's really it. It's in this case, right, specific to this non-farm payroll, going into 8:30, the structure was red or down. That's bearish. And if the red structure, meaning that multi-trend, those two rows of colors, if the lower row is red, all I'm allowed to do is short. Remember, I'm always trying to eliminate one side of the trade from contention. I should never be looking at a chart saying, well, I could be bullish or bearish. That means I really don't have an opportunity there. So this morning, 8:30 a.m. Eastern, red trend. The only thing we could do on NFP was to be a short seller on that immediate reaction lower. That's it. That's really it. And that's what I call the first come, first serve, using the hourly price movement ranges. And basically, if I do the same thing on ES was also bearish. And you'll notice that first move was very much in line with what the multi-trend said was the most probable result in terms of price movement. That's it. Yeah, we keep it really automated in that we can take price and volatility and volume and time, automate these things, put them on our chart. So really all we have to do at that point is sort of read the tea leaves, right? Make sure we're aware of what time it is, make sure we're aware of what kind of hot zones are coming, and just read the tea leaves. All right, next up is, let's see, seems like next week we'll have some big impact days. William, I'll tell you, I just want to get through today. And then on Sunday, I'm going to start to align with what we could see next week. So what I'd like to see is what the aftermath of non-farm payroll is going to be, especially as we go into the London fix. So at 11 a.m. Eastern today, what is the sentiment we're getting as London is wrapping up for the day? And how does the U.S. market react to the morning session, that AM session? And then where do we ultimately close? I just really want to get through today. And then once I see what kind of mood S&P, NASDAQ, Dow, Russell, bonds, Euro, maybe gold and crude are in. Are we above yesterday's close? Are we below yesterday's close? Then I can start to align to next week. So, William, we'll cover that. It's just a little too soon. Sunday at 6 p.m. Eastern, top tier outlook, we'll definitely start diving into that. So right now, I'm a little bit more near-term oriented to what is it that ultimately non-farm payroll can do to the current uptrend in the S&P, and ultimately where is support going to do, where is support going to be. All right. And therefore we know what we're going to be able to do. All right. Next up is Stephen asks, what is MOMO? Momentum. Momentum. Traders love to give everything nicknames. Momentum. And we love acronyms too. We can't help ourselves. It's momentum. How does this complement trend in your trading? What is it measuring to determine green, red, and yellow? Sure. So let me just do this. Let me make this nice and big. There's 2 rows of colors here at the bottom of this screen. And there's 4 moving averages at work actively in real time, determining what momentum and trend are doing. Think of it this way. There's 3 things to think about. Sentiment. What are we thinking? And that maps to momentum. So if I'm thinking bullishly, that's going to map to buying support, or even more so for a broader group of traders, that's going to map to buying at higher highs. Momentum is near term, but if momentum persists, it's ultimately going to affect the trend. So case in point, take a look at this ES here. You see how momentum went bearish around 6:30 a.m. Eastern, and it persisted. And then by 7:10, 7:15 Eastern, the trend shifted bearish as well. So oftentimes momentum is going to precede the trend, but it's not always going to be that way. Momentum has to persist, and then ultimately you will have then a trend organized. So sentiment plus momentum equals trend. And we measure momentum in the top row of the multi-trend. We measure trend in the bottom row of the multi-trend. That's the way I look at it. And ultimately, I like having something color-coded. I like having something objective. I don't want to be looking at 2 moving averages crossing or something subjective or shapes in indicators. I just want it to be like a traffic light. And you'll notice how much I use color, whether that be my grab candles, the multi-trend. I don't know if y'all notice, I wear glasses, and I don't see that well. And that's been something that's plagued me throughout my life. Having big, bold colors, having big, bold zones helps me when I'm looking at the 9 monitors that are here in front of me. And so a big part of, I think, confidence and the ability to act quickly is having a set of indicators that are just very either on and off, right? No, well, this cross made this little shape, and as little as I can have to rely on subjectivity, the more objective it is, and that's really just another layer of the objectivity that I need, right? That I need. All right, next up is, let's see. Bear with me, gang. Let me grab the next question here. Lots of buying yesterday. Yeah. We were buying on Wednesday. Nice follow through. AMD was one of the conversations. Munir, yeah. AMD was one of the conversations that we had regarding, look, I got stopped out of Intel, and hindsight being 2020, I could have gone AMD, and I could have gone Intel as well. I did this, and how many folks have the daily price movement ranges here in the room? I'm sure a lot do. So when I'm taking a look at the Intel chart, one of the things that I did in Intel was I was a little bit aggressive. And I'm going to caution everybody from doing that, even though I'm very bullish for December, especially in things like semiconductors, tech, communications, some of those NASDAQ related. There is just something smudgy on my glasses, especially in those things that are tech and NASDAQ related. One of the things that I did, and I could have done this on Intel and I could have done this on AMD, is wait for the daily price movement range gray zone. There's nothing wrong with the least of the daily price movement range, which is that dashed line, but the gray zones are the more moderate to conservative zone. Had I done that, very different outcome for our Intel trade, and clearly AMD was just absolutely reacting to that in a wow. I mean, talk about it. Look, if y'all are looking for ways to find objective zones on the chart, not necessarily based on price, right? Everyone has price tools. Gang, if price was the answer, then all of us would be fine. But we all know that size, price-based volume, volatility, and time are other factors that move the markets. And a big part of what we do in the mastery is ask ourselves, what are the zones based on volume? That could be a VWAP, that could be volume profile, that could be V-score. And the other one is volatility. Most traders don't have a way to measure volatility, not in a way that reflects historical volatility, right? And so I'm going to show you on the chart. I mean, there's Intel, AMD worked even better. And so, yes, if I had been a little bit more moderate to conservative with my gray zone on the daily price movement range, yeah, that would have been far better. But we do have similar trades going on in Apple and JP Morgan. They're doing fine. I will tell my daily price movement range traders, if you're in the mastery, you already know this. But if you just have the DPMRs and you're kind of out there on your own, wait for those moderate levels, the conservative levels. It's going to serve you still really, really well. All right. Next up, so quite a few. Oh, that's excellent. Next up is, actually, let's go see. What time is it? We're just about ready to wrap up our show. I'm going to jump into the mastery here in a few moments. All right, so you can see the NASDAQ there. For those of you wondering, okay, Rog, what was the plan on the NAS? You can see there, waiting for the gray zone of the daily price movement range. Where else are you going to be doing that? Apple looks good. Microsoft looks good. Amazon. Try to find those relative outperformers. All right, and you'll see just how often within the context of the overall uptrend, price, when it sinks down into the daily price movement range gray zone, is going to be a very nice outperforming part of that chart that you can build long calls. Yesterday, one of our traders asked, Rog, we know that you like long calls, long puts. Please, please, please don't buy into the absolute bat guano that traders cannot buy calls and buy puts and do fine in the equity markets and in the options in space. It's just not true. It's as if to say, if we write premium, that's the magic elixir to all of our woes. Gang, whether you're writing premium or whether you're buying it, if the directional bias is wrong, if you're too early or even too late, it's not going to matter. There's no secret unicorn strategy that's going to suddenly make the trades work because you were selling options instead of buying them. But I do want to mention, anytime that I'm looking to buy calls, remember, if you like to write premium, it's a preference, right? That's all, which is cool. It's lots of ways to success in the markets. I'm by no means going to say there's just one way. Of course not, right? But if you like to buy calls, the same time that I'm looking to say get long Apple or buy QQQ or things like that, that same spot in time, as price is sinking down into support, is an excellent time to sell call premium, right? So if you think about the timing, sell put premium. So if you think about the timing, the same time that I want to get long a call, traders can sell or short a put. The zone is exactly the same. So a lot of traders ask, Rod, if I want to write premium, can I with what you do? Of course, because trading is timing, gang. And if you get the zones right and you can take advantage of the momentum, either way, the person buying the call in bearish momentum is going to be able to pay less for that call. The person selling premium on the put is going to be able to collect more. One of the chronic mistakes a lot of premium writers make is they don't collect enough. They don't take advantage of Momo. So think about that, gang. The route to success in that regard is the same. Respect the structure, use the Momo. All right. So as always, gang, hope that helps. Thanks as always for being here for Charts and Coffee. I'll see you all on Sunday. I mentioned we'll take a look at next week and the hot zones to come, but let's just get through the non-farm payroll aftermath, and then we'll see what is next. All right, gang, be good to each other. I'll talk with you soon.